Anuj is here in the studios with a quick setup in terms of how he's looking at things as we start another fresh week of trading. Anuj, good morning.
Morning, Prashant. It's a make or break week really for the market, and the big cue, of course, is still going to be what's happening to the US bond yield, because a big rally is unlikely unless you see the yields collapse from those 5% levels. And there's the FOMC meet this week, and the US market has been under pressure. In fact, the US market has entered correction territory with 10% fall. Now, normally, markets test a bottom to see if it holds or not. So in this case, a recent low of 18,837 might get tested, and I dare say may even get broken, because the 200-day moving average is at 18,613, and it looks like the market may want to test that once. Of course, the cues to track are more on the positive side than negative side, especially from the earnings season. The domestic earnings continue to look very good. Look at Reliance's numbers. What stands out clearly is retail and telecom, the two domestic verticals of the company, and they both look quite good. There's been upgrade in Maruti and Cipla after the numbers. So as such, there's no problem. L&D numbers tomorrow, perhaps the most important of the earnings season, because it's a bit of a proxy to the Indian economy. And auto sales numbers will come out on Wednesday, so that will be another cue. And then, of course, on Thursday, the expiry, and we'll be reacting to Fed. In terms of the Nifty outlook, we have seen a bearish crossover. The 20-day exponential moving average has fallen below the 50-day exponential moving average. That's one more reason to be slightly watchful of the Nifty from here on. The first support is 18,926, Friday's low, and I think the all-important support, the expiry day low of 18,837. On the upside, the first resistance comes in at 19,163, which is the nearest moving average, 5-day exponential moving average, and then the bigger resistance is 19,251, options-based. On the Bank Nifty, the numbers I'm watching out for, first support is 42,482, Friday's low, and then the bigger support 42,105, the expiry day low. On the upside, the first resistance comes in at 43,186, a 200-day moving average, and then the upside is capped perhaps at 43,500, which is the option writer's zone.
Okay, thanks a lot, Anuj, for that, for explaining how the Wall Street is expected to shape up, especially given that amidst all the geopolitical issues, our own markets have been pretty strong in terms of earnings. So hopefully that will keep the downside limit.